Hello, traders and investors, and welcome back to Explain the Charts. Today, September 19th, 2025, we are witnessing the Nasdaq 100, represented by QQQ, continuing its record-breaking streak, with the S&P 500 also topping 6,600. This monumental surge is largely fueled by the Federal Reserve's recent quarter-point interest rate cut, a move that surprised some but was largely anticipated by the market. Furthermore, the Fed's dot plot now indicates a prediction of 2 more rate cuts being likely within 2025, further bolstering investor confidence. Adding to the bullish sentiment, a surprising $5 billion investment deal between NVIDIA and Intel has significantly boosted the tech sector, which holds a substantial weighting in the Nasdaq. However, it's not all smooth sailing. While the market is buoyant, experts like Karsten Brzezinski of ING Research suggest that traders might be overlooking Federal Reserve Chair Jerome Powell's emphasis on persistent high inflation and the underlying strength of the U.S. economy, implying a more cautious stance on future cuts than the market currently reflects. Jonathan Krinsky, chief market technician at BTIG, also warns of potential near-term choppiness, with only 5 trading days remaining until the U.S. presidential election, and that current P/E ratios in this expensive market demand accelerated earnings growth to be justified. Now, let's turn our attention to the QQQ one-day chart to see how these macroeconomic events are translating into price action over the past year and a half. Looking at the full daily chart, we can clearly observe a persistent bullish trend that has driven QQQ to these new record highs, despite several significant pullbacks along the way. Notice the sharp sell-off in early April 2025, when prices plunged dramatically from around $450 down to approximately $402. This was a substantial correction that tested the conviction of many investors. Yet, the market quickly staged an impressive recovery from those lows, demonstrating robust underlying demand and resilience, which is a strong bullish signal. The volume during these major price swings often correlates with the magnitude of the move, with higher volumes typically accompanying significant rallies or sell-offs. The current price action shows a consistent upward climb since then, with the most recent candle on September 18th closing strongly at 595.32, marking another fresh high. Directly correlating with the positive news of the Fed rate cut and tech investment deals. Zooming in on the 1-hour chart, we can observe the shorter-term dynamics that contribute to the broader daily trends, particularly over the last few weeks. From late August through early September, QQQ experienced a clear upward channel, punctuated by minor pullbacks that consistently found support at higher lows, indicating a healthy stair-stepping advance. We can see periods of consolidation where the price traded sideways, suggesting a tug-of-war between buyers and sellers before the next directional move. The volatility during this period remained contained within a defined range, offering clear entry and exit points for short-term traders. The upward acceleration in the most recent candles on this time frame confirms the renewed bullish momentum, pushing prices further into uncharted territory. Let's pinpoint the recent surge on September 18th by looking at the 15-minute chart, specifically filtering to highlight the trading session from that day in exquisite detail. Here, after a relatively stable pre-market, QQQ opened strong and immediately made a substantial move upwards from around the $593 mark during the first few hours of the market session. The rally was characterized by a series of higher highs and higher lows, illustrating sustained buying pressure and a clear bullish trend throughout the day. We can identify short-term support forming around $594.50 to $595.00 after the initial burst, with intraday resistance briefly at $597.20 before the price pushed higher. Notable volume spikes, especially around the mid-morning and afternoon, confirm conviction in these upward breakouts, signifying strong participation. This robust intraday performance provides direct evidence of the market's enthusiastic response to the announced Federal Reserve rate cut and the impactful NVIDIA Intel deal, propelling the tech-heavy index to close near $596.35 for the day. Now, let's identify some crucial key price levels for QQQ that traders and investors should be monitoring. On the daily chart, the immediate support for QQQ will be found at the previous swing highs from mid-September, specifically around the $590 to $591 area. A break below this could signal short-term weakness. A more significant medium-term support level, should we see a deeper correction, would be around the $560 to $565 range, based on the consolidation seen in early September, which held firm before the recent rally. The psychological and long-term critical support from the dramatic April 2025 low remains formidable, resting around the $402 to $408 zone, a level that would require an extreme bearish scenario to be tested again. For resistance, since QQQ is currently trading at all-time highs, the price discovery process is ongoing, but psychological levels like the $600 mark will serve as the immediate and prominent target for bulls. Beyond 600, traders will be watching for clean breaks and sustained momentum to project further upside targets. Evaluating the fundamental and technical landscape, we can outline key reasons to be bullish or bearish on QQQ. Reasons to be bullish include the Federal Reserve's undeniably dovish stance, with more rate cuts explicitly projected for 2025, which historically provides a significant tailwind for equity markets, particularly for growth-oriented tech stocks. Continued strong corporate earnings, especially from the major tech companies that dominate the Nasdaq, are absolutely essential to justify current elevated valuations. If upcoming reports continue to impress, QQQ could easily extend its rally further. The recent NVIDIA Intel investment deal not only boosts specific companies, but also signals ongoing innovation and robust confidence within the broader tech sector, acting as a powerful positive catalyst. Conversely, reasons to be bearish or cautious stem from the potential divergence between aggressive market expectations for rate cuts and Chair Powell's more measured, data-dependent outlook on persistent high inflation and underlying economic strength. An overly expensive market, as noted by some analysts referencing high P/E ratios, implies a heightened vulnerability to any negative news, such as unexpected inflation figures or earnings disappointments, which could trigger a sharp correction. Furthermore, the upcoming U.S. presidential election, while still a few weeks away, introduces a layer of political uncertainty that historically has led to increased short-term volatility and choppiness in the markets, as highlighted by technical strategists. For short-term traders, maintaining a close watch on the 15-minute and 1-hour charts for intraday support and resistance levels is crucial for identifying precise entry and exit points. Always pay close attention to volume during breakouts or breakdowns. High volume on a directional move generally indicates stronger conviction and reinforces the validity of the price action, while low volume moves can be more suspect. Long-term investors, meanwhile, should primarily monitor the broader economic data releases, ongoing Federal Reserve communications, and the earnings performance and guidance of key Nasdaq constituents to gauge fundamental health. A sustained breach of the immediate $590 support on the daily chart could signal a short-term reversal, potentially leading to a pullback towards the $580 to $585 range as the next logical area of support. Conversely, a clean and sustained break above the psychological $598 would decisively open the door to new uncharted territory, with the next primary target being the significant psychological level of $600. Considering the current momentum and positive news, the likelihood of QQQ testing and potentially breaking above $600 in the very short term is moderately high, perhaps around 65 to 70%, provided no unforeseen negative catalysts emerge from geopolitical events or unexpected economic data. However, the risk of a technical pullback or election-related volatility remains significant, perhaps a 30 to 35% chance in the coming weeks, especially if the ongoing earnings season introduces unexpected weaknesses or the Fed signals a less dovish path. Other things to look for include upcoming earnings reports from major tech companies, the minutes from the next Federal Reserve meeting for further policy insights, and any shifts in U.S. Treasury yields, which can impact tech stock valuations. In recap, keep an eye on immediate support at $590, with stronger medium-term support at $560 to $565 and the major long-term support at $402 to $408, which has proven resilient. Resistance is currently at uncharted territory, with $600 being the immediate and important psychological hurdle. Conditions reinforcing bullishness include ongoing Fed easing and strong tech earnings, while bearishness is reinforced by hawkish Fed surprises, earnings misses, or pre-election jitters. Always remember to manage your risk, stay vigilant to market-moving news, and continuously adapt your strategy based on the unfolding price action and fundamental developments. Thank you for watching Explain the Charts, and we'll see you in the next one.